Bold claim: the U.S. job market is cooling in place, with unemployment claims falling to a level not seen in over 3 years and raising questions about how the Federal Reserve will steer interest rates next. This is the core tension driving the conversation right now. But here's where it gets controversial. Some data hints that hiring remains sluggish even as fewer people file for unemployment, suggesting that the labor market is more stagnant than the headline numbers imply. The Labor Department reports that initial unemployment claims for the week ending November 29 declined to 191,000, down from 218,000 the previous week. This marks the lowest figure since September 24, 2022, when claims totaled 189,000. Analysts surveyed by FactSet had anticipated 221,000, so the actual result was stronger than expectations. Still, seasonality around Thanksgiving can distort claims, as some individuals may delay filing after job loss. Even with the drop, the broader picture points to muted layoff activity. Hiring remains tepid, which makes finding new work challenging for those who do lose jobs. As Kathy Bostjancic, Nationwide's chief economist, notes, the labor market appears frozen, with companies adopting a wait-and-see approach rather than quickly expanding payrolls. Initial claims are commonly used as a real-time gauge of layoffs and overall job market health. The latest pace of job cuts from large employers, UPS, General Motors, Amazon, and Verizon, arrived gradually and may not be fully captured in this week's data, given the time it takes to implement workforce reductions. Other signs show a mixed labor market. ADP's private payroll figures estimate November job losses at 32,000, a surprisingly weak result that could dampen hopes for a rapid labor market rebound but still fuels expectations that the Federal Reserve may cut its key rate next week. The Federal Reserve will weigh this week's layoff data alongside inflation readings, with inflation remaining above the 2% target. The Fed's preferred inflation gauge will be released Friday and will factor into the central bank's rate decision scheduled for next Wednesday. Earlier in the month, a separate government release indicated that September hiring rose modestly, with employers adding 119,000 jobs, though this came after delays caused by a government shutdown. The unemployment rate rose to 4.4%, the highest in 4 years. November's comprehensive jobs report has been postponed to later in the month due to ongoing shutdown-related delays. Other economic signals have pointed to a cooling economy. Retail sales slowed in September after several months of gains, consumer confidence has dropped to a 5-year low, and wholesale inflation has shown only modest easing. Taken together, these data points have increased market expectations that the Federal Reserve will cut rates next week, potentially making this the third rate cut of the year as policymakers try to support a weakening job market. The Labor Department also reported that the 4-week moving average of unemployment claims fell by 9,500 to 214,750, smoothing out week-to-week volatility. The total number of people filing for benefits in the week ending November 22 dropped by 4,000 to 1.94 million. If you'd like, this rewrite can include additional examples or tailor the emphasis toward specific audiences, investors, job seekers, policymakers, to sharpen its relevance.